Market news now. Investors are weighing the slowdown in inflation ahead of the Federal Reserve's policy decision. For more clues on the Fed's interest rate path from the decision later today. And of course, Jerome Powell's press briefing. Following the Fed will have the European Central Bank, which will announce its interest rates tomorrow. Markets will also be contending with decisions from the Bank of England. Meanwhile, oil price settled over $80 a barrel and recorded its biggest daily gains in over a month. The market has been sinking off late on pessimistic outlooks for demand. OPEC trimmed its first quarter absolute oil demand forecast and said the global economic slowdown is becoming evident. Chinese leaders reportedly delayed a key economic policy meeting due to surging COVID-19 infections, adding to concerns about demand recovery in the world's biggest crude importer. Now to talk to us about the latest when it comes to the markets, we are joined by Chantal Marx from FNB Wealth and Investment. Chantal, thank you so much for your time. I mean, how would you describe market sentiment right now following that US CPI figure that was quite surprising?
So I think if you asked me at the very start of the day, I would have said quite positive, because lower inflation means lower interest rate increases, means happier markets. But there has been some trepidation that has moved into financial markets globally today. You can see it in the way that US futures are fluctuating. So futures telling us what we expect the day's trading to look like, up and down, left and right. And if you look at what the South African market is doing today, sold off quite heavily across the board. So there definitely is still a lot of anxiety around what the Fed is going to do this afternoon, and also this evening rather, and also what they are going to say, I think, more importantly.
Were there any positive signs from that CPI print? I mean, for me, I think the standout was the fact that we are seeing gasoline prices and what we were concerned about seemingly coming down.
Yeah, so we are seeing a slower rate of increase on a year-on-year basis. It's still quite high relative to 1 year ago. And that is why that headline number still looks so large. Also encouragingly, food prices seem to be coming down a little bit. I think the area of concern at the moment is shelter prices. So that's basically your rentals and what it costs you to keep a roof over your head. They are still on that is still on the increase. So one of the concerns, I think, for the Fed is that inflation becomes embedded. So things like oil prices and energy prices, which started off driving inflation higher, no longer being the issue, but rather the issue being that you've had this pass-on inflationary impact, and that could be quite sticky.
We mentioned we've got the Fed interest rate decision later tonight, as well as Jerome Powell's press statement. What are you going to be listening out for, and what are we expecting?
So I think the market is now expecting a 50 basis point hike from the Federal Reserve. So that would be a slowdown from what we've seen at the last 4 meetings, where they hiked rates by 75 basis points. I think that the Chairman Powell is going to talk about the outlook really, and where they see rates going in future, and how long this current hiking cycle is going to last. I think he will probably emphasize that inflation is still quite high, and for that reason, I think that they might err on the side of caution in terms of tempering market expectations for an eventual pause and a cut in interest rates. So my expectation is that it could come out a little bit on the hawkish side, just so that financial conditions can tighten again. I think one of the bigger concerns for them as well is that wage inflation is still a big problem. So my expectation would be that that will also get some emphasis from their side.
Hypothetically speaking, if we were to see weakness in the first half of 2023, which sectors would we expect to see it? What's concerning you right now, looking at data points or comments?
So we do expect the first quarter of 2023 and even the second quarter of 2023 to be quite tough. These interest rate increases that we have seen is still filtering into the real economy. So I think that you could expect consumers to come under pressure globally, particularly in the US, Europe, the UK, and locally in South Africa as well. So for that reason, I would stay away from anything on the discretionary side. side. So wants, not needs, and probably focus more on needs. So sectors that generally do okay when inflation is high and consumer wallets are stretched would be something like food retail, food production. You probably won't see super exciting growth, but it could be a really nice place to hide. And then also other sectors that end up being quite defensive during periods like that, particularly in the South African context, would be the banks and financials. Of course, there are other sectors that could give you some really great growth if everything kind of starts falling into place again with the China reopening, like the resources sector. But I think that there's still a lot of question marks around that.
Yesterday, we had the CEO of Zeda, which was the latest company to list on the JSE. They got quite a bit of a muted response. I mean, share price trading lower than what I would have anticipated. What do you make of Zeda, and could it be a good investment in the future?
Yes, I mean, I share your sentiment. I think that the share price is quite low relative to our valuation, at least. I mean, we've got a 25 Rand fair value on Zeda, and we were very conservative in making our top line growth estimates, which would have then filtered down to kind of super conservative bottom line estimates. I really like the company. I think that there's still a recovery to go within car rental and car leasing, particularly as international tourist arrivals start normalizing or continue to normalize. Business travel is also starting to resume, and I think that we're going to see a lot more business travel going through into next year. And what they did during the COVID-19 downturn is that they really re-looked at their cost structure. They pushed through efficiencies. They basically kind of cut to the bare minimum, which means that any sort of increase on the revenue line tends to filter through directly to the bottom line. So, I mean, I think that their near-term prospects at least are quite positive. Perhaps the muted response could be that it is an unbundled share. So it was unbundled from Barloworld, which means that it's a much smaller company than Barloworld. And Barloworld investors have an investment case for Barloworld, which may not include Zeda. Or the Zeda shareholding might be so small in the portfolio that they just opt to sell it. So for that reason, we saw some selling. Those could be the reasons why the response has been so muted. The other reason could be that it is a highly cyclical industry, and we are going into a bit of economic slowdown. But certainly from my perspective, I think it's trading well below fair value.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marx, who's from FNB Wealth and Investment, also talking to us about what we can expect from the Fed. We're going to take a quick break. When we come back, we'll look at the year in review with Isaac Odendal from Old Mutual. So stay tuned.